Fed decision update time, folks. Well, the Fed just came out with its decision on rates a little while ago. No change in interest rates as I expected. At least that's what I mentioned earlier, which was in that Fed fund futures probability. That's actually a very good predictor of Fed policy. So you might want to just keep that in mind for the next time. The Fed cited in its statement it cited the weakening job market, but it didn't mention anything about the Verizon strike. We know that's what was the cause of it. And it also mentioned low levels of fixed private investment. You know, a lot of that's been related to the weakness in the oil patch, but what we've seen recently was an increase in oil rigs in operation. So could be seeing a pickup now in oil patch investment once again. No mention of that either in the statement, okay? We took a profit, another profit for MMT Trader, cha-ching, right there. We took a profit in our long S&P, September S&P E-mini position. That was a position that we put on initially, a couple of days ago. It went against us. We added a unit yesterday, and we sold into this rally today at 2077 on the September S&P E-mini. So that's another profit, continuing the unbroken streak of profits for MMT Trader. By the way, the stocks we added yesterday in the report, or the stocks we added that were in the report, they're doing well today as well. Now, as far as the Fed decision, I have to say, a little bit disappointing, because if you look now at central bank policy just everywhere, it's really, really kind of deflationary. You know, we saw the last week the ECB saying they're buying high yield bonds, right? I've been talking about this now. And the Fed, this Yellen Fed, seems so scared to raise interest rates. I mean, I don't even know if we'll get one now. We maybe get one more. I thought we'd get 3 more this year. And it was really the basis for a lot of my bullish call in materials and gold and stuff like that. Speaking of gold, it's up today. And if you have deflation, the gold rally to me is a little bit suspect, unless gold is onto something. Maybe gold senses that the level of government spending we have right now is going to be enough to keep us growing. We're not growing that fast, remember. I mean, that's why central bank monetary policy would have been really helpful. We're only growing at 0.8% here in the United States, and that's with spending already about $90 billion over last year, and last year was the biggest increase in 5 years. So we really need another injection, and that interest rate hike would have helped, but they don't see it that way. They see it the other way around, which, let's face it, the low rates have not spurred really robust economic activity, neither here nor in Europe nor in Japan. Negative rates, ridiculous. It's ridiculous. Come on. So where are we? I think we're still kind of in a neutral environment. One thing I will say, copper rallying today. We have long positions on in copper recommended by the MMT Trader report. Those are making money. The copper ETF that I recommended is also making money. All right. So that's pretty much it. So this meeting is over. Now we get back to business, and we get to get nervous about Brexit next week. Anyway, we're ringing the cash register over here, folks. We are ringing the cash register over here at MMT Trader. So that's it for this video. See you later on. Bye-bye.